Hello everyone and welcome to the first Friday NFP session today, 6th of January with CM Trading. Now today is a very exciting day. This month we've got Trump coming into the office, we've got NFP today, and all week we've been looking forward to the NFP and really haven't, did a lot of trading. We did the moves as usual with the waves in the market, but today is the day that we've all been waiting for, and today there's going to be a lot of trading opportunity for all of the pairs. So let's see what we've got on the fundamentals first with Anthony, and then Andrew's going to be kind enough to give us a heads up on the gold and pound. Anthony, what do we got?
Well, today's going to be a very exciting day for trading. With the NFP being out today, it's going to be amazing. We've got a lot of people who are a little bit skeptical. Some people are saying that the estimate is 175,000. So the ADP reports came out yesterday. They're saying that they estimated around 135. Nothing is official yet, so we'll be waiting for those reports as well. We've also got a lot of things happening for the next week or so. Next week we have Janet Yellen is going to be speaking. That is always
interesting.
Very much so. So we've got her speaking next week. We've got some reports coming out of Britain. We're looking at the core retail reports coming out next week as well. So there's a lot of things in the market that are going to give us a lot of volatility and create a little panic here and there, but it's going to be great for everybody on every side.
Absolutely. Volatility is exactly what we need to trade.
Definitely.
Okay. Which day is that coming out? Yellen?
Now, Janet Yellen will be speaking on the 13th, Friday the 13th.
Friday the 13th. That's going to be, whoa.
Friday the 13th is always a scary day. So she's going to be speaking on the 13th. We have on the 19th, the ECB is coming out from Europe. So we need to be looking out for that also. Anything monetary, we've always got to pay close attention to. We've got some more interesting things happening. Let's see, I had some things over here. The retail chains is going to be coming out. And I didn't want to jump all the way to this, but on February the 1st,
what's happening then?
Well, the Fed meets again and a possible interest rate hike. We're talking about 3 interest rate hikes this year. We'll see how it goes, okay? We'll see how it goes.
Okay. Sounds very interesting. So you got to keep your eye out for what the Fed does in February, especially with the Yellen talking on the 13th of Friday. Sounds like doomsday to me. What you got, Andrew?
Okay, thanks. I'm just going to do a quick rundown for you on the pound, the euro, and talk a little bit about what the non-farm will do to the markets, and then I'll round off with a little bit of news on the gold. So the pound, we can see on the charts, advanced very sharply in the US session, rallying up to around 124.32, the highest it's been since December 19th. Once again, stronger than expected UK data underpinned the sterling in spite of what happened with the Brexit. With the December market services PMI up to 56.2 from previous 55.2, which was showed a little bit of strength for the economy. Combined with the latest manufacturing that's coming out of the country, the construction PMI means that more houses are being built. So, in light of what's happening with the Brexit, Britain seems to be holding its head above the water and rallying nicely. Talk a little bit about Fibonacci, maybe you guys use. From a technical point of view, you guys that trade on charts and not necessarily looking at the fundamentals, the 38.2 retracement of the latest decline from around 124 and currently trades above its 200 EMA. Now, 200 EMA is what the banks are using, so anything above that is a bullish expectation and below is obviously negative. The Euro USD, as with the pound, price of 106.02 mid-afternoon in the American session following the release of their employment figures, released one day before the non-farm. Looking at what happened with the ADP, the employment survey printed at 153, which missed their expectations of 170, while November readings suffered a 1,000 downward revision. Weekly unemployment claims, however, fell to 235k from previously 263, so dollars decline, part after release of the ISM, which came at 57.2, beating expectations there. I'll just talk a little bit about the gold for you, and then we can get back to my colleagues here. The gold extended to the upside as we saw, setting a new 5-week high, which means demand for the instrument is rising. Normally when the dollar, there's a misunderstanding of what the dollar is going to do, people thinking it will decline, they tend to move to the gold market because it's a safe haven. And the final bit of info for you guys, the support level 1181.43, so all the attention now is at the 1200 level ahead of today's important jobs data. Expectations that the non-farm payroll rose 175 in December and the unemployment rate should tick higher to 4.7. So today ADP employment survey missed its expectations, and there may be some downside risk for the payroll, so we may see a downward decline for that. Back to you.
All right, so the big question, right? We're listening to a lot of news, right? In fact, we even have news open here. I won't tell you which channel it is, but they're all blooming, and even from Cincinnati, right? Okay, but one thing they never tell you is how you're going to trade this stuff. Everybody's got philosophical ideas about how much the numbers are going to be, but what are you exactly going to do? Well, if you watch today's video and you take a look at the blog, there are two things you can really do. We mark the support and resistance levels. Now be mindful about where the trend is going. We know euro dollar is coming down, we know dollar franc is going up, so dollar is actually in a strength gaining position. So if the market goes up first in the euro dollar, it's going to hit a resistance level where the market will want to push it down, because everybody is actually eyeing the 1 level. Euro dollar coming down to 1. That's the big question mark everybody has. That's why every time euro dollar goes up, somebody is hitting it down. So I don't think today is going to be any different. What's going to happen with the euro dollar? We're going to have a whipsaw. It's going to go up only to be smashed and sold again. So that's my attitude on the euro dollar. Dollar franc is going to be the opposite. They're going to push it to a support level only to take it even higher. So I'm expecting a strengthening dollar this month. Okay, for the month of January, I'm thinking the dollar is going to be stronger. February, we'll talk about it when the day comes. But January, I think, is going to be a time when we're going to be seeing the euro dollar once again continuing with that downtrend, and maybe even coming lower than the low of the month, and we'll see how that turns out. But that's going to be my attitude, and that's going to be my trading attitude. So all the best with your trading, and we'll see you guys next weekend, and have a great weekend. And next Friday we'll be on again, 13th it is, with Janet Yellen.
Bye guys, nice to meet you. Bye bye.